Coming up on Business Incorporated today, South Africa's employment rate declines 5.8%. Unemployment rate declines as well by 5 or 6.8%. UNCTAD report shows Africa loses $89 billion a year to illicit capital flights. Cameroon, IFAD, join forces to boost food security, support small-scale farmers. Hello and welcome to the program. I'm Temple Ashaju. Let's get the show started with intraday market numbers, which reversed Monday's positive trend. And South Africa's JSE declined by 0.34% as labor force statistics released today showed 2.2 million jobs were lost in Q2 2020. And in Nigeria, the NSE declined by 0.13%, while Egypt's EGX30 was the most positive index at intraday, up by 0.27%, while Kenya remained closed negative since Friday. And major markets in the Gulf region were mixed today, with the Qatari index posting the highest gain by 0.27%, while Saudi Arabia's main index declined the most by 0.48%. In the UAE, Dubai's main index shed 0.38%, while the Abu Dhabi index rose marginally by 0.06% at intraday. And now European markets retreated this morning, pulling back from Monday's rally with Brexit talks and the first United States presidential debate on investors on the radar of investors. But let's begin, of course, with Ashutosh Pandey from the Frankfurt Stock Exchange, who will be giving us some updates from the European scene. Hi, Ashutosh. The stage is now set for the first U.S. presidential debate between Donald Trump and Joe Biden. How are traders gearing up for this face-off?
Yes, to begin with, they are a little cautious, and that's the reason why most of the major indices across the continent are trading in red or they are flat. You can see behind me, DAX is also trading marginally in the red. So that's how the state of affairs is, and that's because tonight is that big debate, the first debate, presidential debate between Joe Biden and President Trump. So for now, the markets have priced that it's going to be a win for Biden. And that's the reason why, if there is a good show by President Trump during the debate, that's going to lead to some volatility on the markets. And perhaps that's the reason why many traders are holding on to the bets for now.
So we also know that the latest Eurozone consumer and business confidence numbers released a short while ago is in, of course, and of course traders and dealers are currently digesting that. But how are the figures looking at this point? What's the reaction to this data?
Oh, well, yes, the numbers have actually come in positive. The fifth straight month when business confidence has actually gone up. Having said that, it's still well below the pre-pandemic levels. And the rise that you see in the middle of the DAX behind me, that was when the news came out. And having said that, across the board, like services sector, manufacturing sector, the sentiments are improving, but it's the services sector that is actually causing some sort of doubts in the minds of experts. They really can't understand as to why the confidence is rising at a time when the COVID cases are on a rise. And we all know that what rising COVID cases mean for the services sector, the restaurants, the cafes, the hotels, the airlines. So I mean, the higher the cases, the more are the chances of sweeping restrictions put back in place. So really they can't fathom as to how the confidence is rising despite a rise in COVID-19 cases. And also the fact that the worst hit of the countries for now are France and Spain. And even these two economies did see consumer confidence rise and business confidence rise. So that's again perplexing, because these are the two countries where the situation is really the worst in the continent as far as coronavirus cases are concerned. And it's also at odds with what the Purchasing Manager Index told us last week, that the sentiment was turning negative. And so that's some sort of a doubt, but nevertheless, fifth straight month of consumer confidence rising, and the traders definitely invested on those numbers.
So of what significance really will all of this number be for the recovery of the Eurozone economy?
Well, it's difficult to say. It's a lot of uncertainty is there. That's primarily because of the rising cases of COVID-19. You can't really say how it's going to pan out over the next quarter, because for now we did see, after the restrictions were lifted, we did see a strong recovery. But that recovery seems to be losing steam now as we are talking. Many of the surveys are pointing towards a direction where this recovery has stalled. So that's going to be problematic. And if the virus situation is not brought under control, then perhaps we are even looking at a contraction again in the fourth quarter. So it's really difficult to say at this point of time. A lot will depend on how well we control the coronavirus situation on the continent. Even if we don't get like a sweeping restriction or the lockdowns like we saw earlier this year, mind you that the example from Sweden does tell us that the consumers are not very forthcoming when it comes to spending, even when it's not as draconian as a lockdown. The businesses are also will eventually start cutting production based on what the demand would be from consumers. So yeah, a lot to watch out for. For now, the key is to get to bring this pandemic under control.
This must be one of the main launch on the table of the fiscal and monetary authorities. Let's see how they deal with it going forward. Thank you, Ashutosh Pandey. Let's move on now with more markets data, where shares in Asia Pacific were mixed today as logistics firm ZTO Express soared in its Hong Kong debut. Meanwhile, the Hang Seng Index in Hong Kong dipped by 0.85% to close at 23,275.53. Mainland Chinese stocks were higher, with the Shanghai Composite up 0.21% to about 3,224.36, while the Shenzhen Component added 1.095% to approximately 12,900.70. And of course, in South Korea, the Kospi rose 0.86% to close at 2,327.89, while Australia's ASX 200 was flat on the day at 5,952.10. In Japan, the Nikkei 225 advanced by 0.12% to close at 23,539.10, while the Topix index dipped 0.23% and ends its trading day at 1,658.10. Overall, the MSCI index, which is that of Asia ex-Japan, was fractionally higher, as we know. And U.S. stocks futures ticked slightly lower this morning ahead of the first presidential debate. Futures for the Dow Jones Industrial Average dipped 86 points, while contracting for the S&P 500 and the Nasdaq Composite also traded mildly in negative territory. The quiet move in futures follows a solid start to the week for stocks during Monday's session, with the Dow rising by 410 points or 1.5 points. The S&P 500 and the Nasdaq rose by 1.6% and 1.9% respectively. Monday's rally set up the markets to snap losing streaks as the Dow and the S&P 500 have fallen for 4 consecutive weeks. And oil prices fell earlier today, pairing gains from the previous session as persistent demand concerns due to the coronavirus pandemic outweighed hopes for a new U.S. stimulus package. U.S. West Texas Intermediate crude futures dropped 0.5% to $40.38 a barrel, while the more active Brent crude futures for December fell by 0.4% to $42.68 a barrel. The November contract, which expires on Wednesday, fell by some 17 cents to $42.26 per barrel. Commodities markets crept up earlier in the day as Democratic lawmakers unveiled a new $2.2 trillion coronavirus relief bill, which the United States House of Representatives Speaker Nancy Pelosi says was a compromise measure. And let's talk a bit about gold prices, which is in the metal markets. Gold prices held steady today as the United States dollar retreated from a 2-month high, with investors looking forward to the first United States presidential debate and developments on a new U.S. coronavirus relief bill. Spot gold was a little changed at 1,880.1 cents per ounce, while the U.S. gold futures were up some 0.2% at $1,885.50. The dollar index was tepid, drifting away from a 2-month high of 94.745 reached last week, and a weaker dollar makes gold cheaper for holders of other currencies. Elsewhere, silver dropped by 1% to $23.49 per ounce, while platinum eased by 0.3% to $876.47, and palladium gained 0.4% to $2,263.97. Now, data released this morning by Statistics South Africa shows that a massive 2.2 million jobs have been lost in the country in the second quarter to 2020. However, unemployment rate went down to 23.3%, down from the 30.1% recorded in the first quarter of this year, 2020. At a briefing, media briefing, specifically in Pretoria today, the Statistician General says this is the first time ever that South Africa has such numbers. But he explains that this sharp fall in the unemployment rate is not a reflection of an improvement in the labor market, but rather an effect of the national lockdown, since the definition of unemployment requires that people looking for work are unable to find work.
Employment rate for the second quarter of 2020 is 23.3%. And I need to put this in context because we will remember that we have been sitting at an unemployment rate of about 29-30%. Now we are sitting at 23.3%. The people of working age, that is 15 to 64, they remain at 39 million, of which 18.4 are in the labor force. And the employed are sitting at 14.1%. We will make comparisons with the first quarter to make a better understanding of the figures. The unemployed are sitting at 4.3 million, accounting for 23.3% as unemployment rate. And indeed, the discouraged work seekers are sitting at 2.5 million, and 18.1 million are what we call other not economically active.
And the United Nations Conference on Trade and Development's report on economic development in Africa shows that African countries lose an estimated $88.6 billion each year, equivalent to 3.7% of the continent's economic output in illicit capital flight. UNCTAD's report states that curbing illicit capital flights could generate enough capital by 2030 to finance almost 50% of the $2.4 trillion needed by sub-Saharan African countries for much-needed climate change adaptation and mitigation measures. Now, the report calls for increased transparency and cooperation between tax administrations globally and within the continent to tackle tax evasion and tax avoidance. It also urged the African Tax Administration Forum to become a platform for regional cooperation among African countries. And the International Fund for Agricultural Development of the United Nations has announced an $59.9 million investments to fund a 6-year extension of the successful commodity value chain development support project. Now, the president of IFAD and the Minister of Economy, Planning and Regional Development of the Republic of Cameroon met virtually to sign the financing agreement for the second phase of the commodity value chain development support project. About 32,000 poor rural households will benefit from the new project, which will help small-scale farmers and boost rice and onion production in the country. The project's overarching goal is to strengthen rural livelihoods for greater income, improve food security and nutrition, as well as integrate approaches to mitigate the impact of climate change. When we return from this short break, we'll talk about commodities markets. This is still Business Incorporated, and of course, welcome back from the short break. Well, Nigeria is the largest producer of sesame seeds in Africa, and of course, the third largest in the world, producing about 580,000 tons in 2017 and accounting for some 10.5% in global supply. Nigeria's sesame seed export earnings so far has declined by some 67.9% as at the second quarter of 2020 to around $41.45 million from $129.29 million, in spite of being the second largest exported crop in the first half of the year. Well, global sesame seeds output was valued at some $6.5 billion in 2018. But generally, we know that this decline with us at this moment. But we have Oreofe Bajamo, a research analyst from Financial Derivatives Company, joining us now to actually speak to this issue. Oreofe, thanks for your time on the show. Talk to us about the possibility of Nigeria matching up with the global trend of growth and, of course, appreciation in prices, as we've seen in the data that you have.
So we can expect Nigeria to match up with the global output as there is a rising global demand for sesame seeds. Sesame seeds are used for a variety of things aside from a source of food. It is used as a source of vegetable oil and a key ingredient in pharmaceutical and cosmetic products. Aside from that, Nigerian farmers are getting good returns from sesame seeds due to its high resistance to drought, its high tolerance to pests and diseases, and its low to no use of fertilizers, making it an affordable resource to produce in Nigeria. However, for Nigeria to reach the expected growth rate, we have to tackle the challenges that the sesame seed farmers are facing. Some of the challenges include the inadequate access to credit facilities, the use of poor equipment and facilities, the use of mundane and archaic techniques of production and harvesting, the use of inadequate inputs for production as well, and the use of unskilled labor in the production and harvesting process. All these challenges would hinder Nigeria from reaching its growth rates that we have predicted for sesame seed output.
Okay, Oreofe, we also know that a lot of the production is actually in the northern part of the country, and of course that's also the area of the country or the hemisphere where we've got a lot of insecurity at this point in time. You have herdsmen issues, crisis, back and forth, the Boko Haram issues everywhere. Could that actually be one of the key reasons why we have the sharp decline in export earnings at this point in time? Is there a way that all of this crisis, when you square them up, have an impact on the production of sesame seeds?
So the crisis and increased violence has affected not only sesame seed output and earnings, but all agricultural commodities produced in the northern parts of Nigeria. The increased crisis has led to more than 300,000 people being displaced from the northern part of Nigeria, farmers included, as well as the destruction of farmlands that have been used for the production of sesame seeds. However, this is not the only factor, like you have said, that has affected earnings for sesame seeds. A key factor that has affected the earnings for sesame seeds would be the emergence of the pandemic and the resulting lockdown measures. Because of these measures, there has been a disruption in not only output but in demand of sesame seeds in the domestic and global markets. In Nigeria, as majority of farmers are subsistence farmers, the lockdown measures constrain these farmers from transferring their goods to the market so that they would then reach exports, and has also led to the decline in global demand as many businesses were closed down due to the lockdown measures.
Oreofe, I believe you also know that we still have the issues of bad roads network connecting the farms to the urban settlements, where, of course, all of these sesame seed and, of course, similar cash crops like that are actually being marketed or sold, whether the commodities exchange or otherwise. But we also know, Oreofe, that the federal government has been putting efforts to making attempts generally to kind of diversify the economy with agriculture. Is there any key role you see sesame seeds playing in this diversification effort of the federal government?
So sesame seeds, like other agricultural products, are very crucial to our diversification plan.
True.
Sesame seeds is already one of the top earners for non-oil commodities in exports. However, we have not yet reached our potential. For us to reach our potential, we have to resolve the challenges that exist in the sector. There should be an increased access to credit facilities, increased government support and intervention, increased training for these farmers on better methods of production and harvesting. However, this is not the only way. If the private sector can also dive into the sesame seed production and unlock the potential that this sector has, it would lead to an increased production and increased earning for the sesame seed market and industry.
All right, Oreofe Bajamo, a research analyst with Financial Derivatives Company. Thank you so much for your analysis, and let's hope that these smallholder farmers and other key investors in commodities will be able to have some access to credit facility, as you've actually suggested. I appreciate your insight and your time on the show. Thank you.
Thank you for having me.
Great. So, Kenyan farm is rearing black soldier fly larvae for animal feed. In the 10 days it takes for them to grow, the larvae needs to be fed too. And of course, the fruits, which is a waste from factories and food markets in the capital of Nairobi, is just one of the things that we have on focus. Let's look at this report.
A Kenyan insect rearing farm started 2 years ago is using larvae to consume 20 to 30 tons a day of fruit waste collected from factories and markets in the capital, Nairobi. The chief executive expects this to triple by the year's end. Insectipro in turn processes the black soldier fly larvae into animal feed and the rest of the waste into manure at its farm located in Limuru, about 28 kilometers from Nairobi. It produces between 2 and 2.5 tons of larvae a day and expects this to double once it installs a bigger drying machine.
So our waste comes in from all the big markets in Nairobi, from City Park, from Wakulima, from Marikiti. But we also get a lot of waste from industrial juice companies, so companies that make orchid juice, Kevian, all those people, we collect their waste and we bring it to our facility and then we mash it into food for the black soldier flies. Apart from that waste, we also use a lot of brewery waste. So per day we get between 20 to 30 tons of waste, which we then convert into 2.5 tons of end products.
Nairobi generates about 3,000 tons of waste daily, with 60% of it being organic material, according to the Ministry of Environment and Forestry. In the 10 days the black soldier fly is at larva stage, it is known to consume 60% of the waste fed to it. Insectipro's larvae is sold mostly to animal feed millers, with their biggest clients already asking to be supplied with 40 tons a month. While use of black soldier fly to produce animal feed has been going on in Kenya as far back as 2012, Insectipro's kill was the biggest in the country.
The biggest difference is that the BSF manure is the plant converts it very fast, so it's like fertilizer. It's taken up very fast. It breaks into the soil very well, and it also helps the soil maintain a very good texture.
Hujpa said to date, Insectipro had invested $850,000, with most of it going to machinery, which the company had to design and contract to local fabricators to build.
We think Insectipro is a company of the future because we are where sustainability and profitability meet. And more importantly, we see the beauty within the beast, and I think you should too.
Insectipro says it is researching how to produce chitin, which is left over in the black soldier fly shell when it changes to an adult, and has potential use in pharmaceutical industry, for example, in wound dressing material.
And this has been Business Incorporated for today. Thank you for being a part of it. I'm Temple Ashaju. I'll see you next time. Bye for now.